All right, so welcome everybody. Today is Thursday, December 12th. It's a mentor session for Thursday Thursday mentoring session for December 12th. Today we're going to talk about how to identify some key levels. We've been talking about that for quite a while in the room, and the question has come up. It's like, how do I come up with this stuff? So try to do the best I can to describe it as best as I can. Make sure you guys bring all your questions. I'll try to answer them all. All right. So what we have is I've got basically a screen with 4 charts on it. Starting with the 4 hour, we'll go left to right. The 4 hour, the 1 hour in the center left, center left, center top, and then the 15-minute to the top right. And then down below we have the 5-minute on the bottom left, and then the 2-minute to the center center bottom, and then on the bottom right, the 1 minute. And then I have the 30-second, which I'll try to bring it in here, and it just doesn't work for some reason. Let me do this. Where'd it go? And I'll bring it in here and maximize that. And when all these levels that we plot will show in here. Okay, you guys have any questions about that so far?
No.
Nothing. Okay. So what we'll do is we'll start with the highest time frame, and we'll start with the 4 hour. And what we'll do is we'll maximize it and then kind of scrunch it down a little bit. Go back as far as we can without getting too crazy. Okay, we're going all the way back to June. And then what we're looking for is we're looking for levels where price is peaked and then basically reversed from, or has come down to untouched. So let's use this as an example. I draw a line here. What do we see? We have a point here, okay, back in June, where it basically made a high and then bounced off. See that? So if I was to go like this, and now we're in real time, okay, you can see that we basically made a high and then bounced off of it. Do you guys see that? Do we agree?
Yes.
Yes.
Okay. So that was kind of like we reached, and that was probably an all-time high at that point. So if we go back to June 20, was that June 19th? Is that what day that was? Yeah, June 19th, it looks like. June 20th. So made an all-time high, and it just bounced. So we mark it. All right. And then we just kind of watch to see what price does. And here, July 3rd, right? It peaked through. And then it just kind of went up and then tested it. Right? I mean, if we zoom in a little bit like that, okay, here's our point. So June 20th was the high, right? Which, by the way, look at the candle that it's a Wix candle with, like a doji in the bottom. So this would be like a classic reversal. So if we see something like this, okay, forming, and then we get this kind of a close on the 4-hour candle, then we can pretty much expect price is going to drop down. Don't know for how long, but drop down significantly. But if we want to see where would it go, well, we have this gap here, and then we have this other previous. So we have this range. So, and we have this big giant 4 hour candle, which is 279 points, which happened on June 17th. Okay. So we'll just continue, and then we can see price drop down, and look at where it dropped down to, right? Right to where the opening of this gap was. And it kept going. almost filling that gap. You see that?
Yes.
Okay. So it basically, and now it's using this area as support, and it's going to bounce off and go back up, going to retest this area again because it's establishing a range. And it's doing all this in a matter of almost 2 weeks, right? From the middle of the month to the end, still in this range. When did it break out? July, when we say July 3rd, right? So it was in this range. Remember we were talking about earlier that I was expecting price to be in a range for, remember Grant, we had that I zone, that development that we're just shrinking it down to a micro level. I was expecting to break out of that range before I looked again into a trade. Now this is just on the higher time frame. Okay. You'll see how all this applies later as we same concept will apply as we drill down into the different time frames. So we established this line right here where we broke out of it, retested it right here. Literally, you can see it to the tick, right, of the line. And I just basically, I drew the line at the top. So you could see that we knew that at some point it's going to break away and then it's going to come back and retest it. And it did it once right here. Okay, July 5th. Okay, so we keep going. Okay, look at that. What happened here? July 11th. This was a 478 point move down from the open. And where did it go?
That's a sweepy swing on the higher time frame.
It's okay. I can't explain why it does it, but it does it over and over. And I just picked this a little randomly. I had no idea. I just remember I scrunched up the chart and I was looking for a line and this is what just popped at me. So I drew it. So
essentially support becomes resistance. We're looking for a retest. Or in this case, resistance becomes support and we're looking for a retest.
Correct. So if we were looking to get into a trade, right? Let's say, for example, we broke out of here. So we were looking to have this thing retested. Here's the thing. Which way is the market going over time?
Up.
Up, right? I mean, let's just extend this. Here, I got a better idea. Let me do this. Okay, let's just leave that there for now. Okay, so we know that over time, the market's been in an uptrend because we're on a 4-hour. Okay. All right, so we'll keep going. So if we're in an uptrend and we see this, and we know that the market, here, just for fun, can you see kind of what's happening here? I mean, we're going back to 2023 here. Okay. So even though we dip down below, right, this is a line that I drew way back when. Let's take it out. So we try to find most current. So from August to like December, right here, I just kind of drew the line, and you can see that the market's coming down to test it. It never really reached the bottom of this, and it just bounced back up. Come back, test it, bounce back up. Meandering around this price level, right, which was a all-time high at some point back in June, remember? So it's meandering around here, come back down, testing the long-term, right, trend line, bounce back up. And then we're back to real time right here. So you can see how this has like been stair-stepping. And this is a line that I drew way back earlier in time. And it actually predicted these moves in the future. Do you guys see that? Does that make any sense so far?
Yes.
Okay. So we drew this line back in June, right? Here we are, November 19th, and it gets tested again, right? This line. So we could say pretty fair and certainty that the 20,380 level is a pretty good level. Would you agree?
Yes.
Yes, to go long.
Yeah, to bounce off and go long. Okay. Let me pull up one thing here. How do I do this? What I wanted to do is I wanted to pull up my file and see. Okay, here, you know what? I have a better idea. So what do we say? We said 380. $20,380, right?
Yes.
$20,380, we said, right? Okay. So somewhere back in time, I had something at 20,375, 74, and 387. So it's literally like splitting it right down the middle. And those were levels that were called during that day or that week, or, you know, I can actually pull up the actual spreadsheet that I have and I can give you the date. I just don't have access to it right now. But here's the levels. So 388, 373, 370, we have a wall. 405 is another one of my levels. So basically 380, we said, right? 383, 380. It's literally right in the middle between these two levels. So you kind of see how even going back and looking at all this and we plot everything, we can still make sense of what happened back on that particular time and how it plays into the future. Okay, so that's on the 4 hour. And then we can find some other points, right? So hold on one second, guys. Give me 1 second.
Hey, while we're waiting for Ron, we were talking about TV shows. A really cool TV show just came out called Rogue Heroes. It's about the founding of the Special Forces with the English SAS. Really cool show.
Yeah, I'm just watching Game of Thrones for the first time. Anyone seen that one?
Oh yeah, every year my niece would say, "Uncle Grant, what do you want for Christmas?" And I get the season of Game of Thrones. I mean, it's 10 seasons. That's a long commitment.
I'm not even halfway through, and I'm watching it for a year.
I found it too slow. I like Vikings a lot better.
Mhm. Yeah, I'll get started on that in 2 years when I'm done with Game of Thrones.
Did you watch Lost?
No.
Okay, there you go. There's another one.
That's a pretty
Lost
long
is good,
series,
but it's
right?
old.
Oh, come on. Lost, it's an oldie but a goodie. Neighbors used to get around and watch it around the TV set and make it a movie night.
Oh, I'm not saying it's good. It's just old.
I mean, they just need a professional baker there to make snacks. And I mean, you got a party. I was listening to Tucker Carlson. They interviewed Willie Robertson from Duck Dynasty, and he was talking about his family before everything took off. So I started watching Duck Dynasty, and I'm kind of hooked on that. Hey, Kirk, do you know what trend channels are? This kind of reminds me of the trend channels that I looked at like years ago.
Yeah, this is like uh trying to think of the word. Well, yeah, price action trading. This is what you do when you price action trade. Um,
Drawing the trend line and having a bounce off the trend line and stuff like that.
yep.
I think even DM had like a video way back when, and he was talking about like, oh yeah, you can draw trend lines. Um, so I'm kind of curious how this is going to go. Um, this is different because he's got the horizontal line in there.
So I just tried to open up the charts. I was going to make a quick chart like Ron had, and I tried to open up just a regular old chart, and it went to a diagnostic bar. And this happened the other day when we were looking at it. So I'm looking to see if the toolkit's been updated. There's a new toolkit that came out on the 6th of December if you haven't updated it yet.
Any cool new toys with it?
Okay, sorry guys, I'm back. Okay, so where were we? So do we have another level that we can throw up in here? Do we see something? Maybe this one? How about here? Can we use this one? Came up, rejected, came back up, tested, peeked through, rejected, then broke through, fake breakout, came back down, test. We can use this. We got like 1, 2. This is a doji literally right on it. Major indecisions on this candle. Look at the wicks. And the body's so tiny right on the line. Test. We can use this one too. Okay? And that's the 4 hour. Jump down to the 1 hour. Do the same thing. Now what we'll see is that the 4 hour is going to jump at a lot of major points on the 1 hour. You guys see that?
Yes.
Okay. So now here, can we find some other levels that make more sense on the shorter time frame? Like maybe somewhere around here? Let's see. You can probably add this one. Why this one? Why did I just put it here?
It's the bottom of the gap.
Well, actually, it's the top of the gap. If we look at when it basically started, so top, bottom, right? Whatever. But it would be the top of the gap, right? It tried to.
Ron, I looked at trend channels way back in the past, and doesn't it have to have like 3 points for it to be significant? Because otherwise you're drawing like lines all over the place. Am I remembering that correctly?
Yeah, that's true. You want
Okay.
at least 3 points. Yep.
Okay, got it.
Okay. So we have 1, 2, right? Because remember, this is a 1 hour. So if we were. So here we are, right? If we look back, we're basically from May 24th all the way to June 13th. That's a significant amount of time. Would you say we're making higher highs, right? So when we get to this point, we can say that this is the top when it's starting to retrace a little bit.
Why wouldn't we
Yes.
just start in early June?
What's that?
Why wouldn't we just start in early June? Because it looks like it's making lower highs for a while there.
I'm just picking any arbitrary date. Doesn't really matter. I'm just looking for a line that we're going to draw on a level. Okay. I mean, you can go back however, I mean, you can do this for days, right? We're just trying to drill down to what's significant for what we can use today, right? So I'm just kind of going through the concept. So again, it basically went up, and then this is before the gap. This is the last price we have before the gap, right? So we have 2 touches right here within a day or so. Okay? On the 1 hour time frame. Fast forward a little bit, you can see it came down to it, not quite to it, and then reversed away. Still 40 points away, give or take, but still. It went all the way up to here and then just pulled back, right? Gave all this away and coming back to refill the gap back to this line. Okay. And then obviously it went up, did whatever it needed to do. And then 2 months later, comes back just to retest that line yet again. Bounced off of it, come back down, retested it, failed, dropped. Okay. Started pushing downward. I'm sure we can come up with some other levels down here as well if we wanted to, but I'm not going to go that deep into it. Started to go back up towards our line again. Okay, because we can just leave that line there. But if we're here and we just broke this, you're thinking, okay, well, if I want to take a long, usually we want to bounce off of it. We take a long, but all of a sudden we get this big break down. We're like, okay, so longs are off the table. So what we're going to do is we're going to wait for this thing to come back, retest and break, retest again and go long, right? In other words, come down, test, pull back a little bit, retest again, and it's either going to bounce or it's going to, go through. Well, this time it went through. All right, well, let's see what happens here. Comes back up, tests, went back down. Let me zoom in a little bit so you can. Okay, went back down, retested it again, and this is all within a matter of a few hours, same day, right? Dropped again. Comes back, retests it again, fails, retests again, fails, right? So how many failure points have we had so far? 1, 2, 3, 4. Well, even if we are looking at on a simplicity chart, right? And we're trying to break out of a consolidation. If we looked at it's trying to break out 3, 4, 5 times out of a consolidation zone and it's not doing it, what can we expect would likely happen the next time?
Go the opposite direction.
Well, no, it's going to break out. It's going to break out, right? If this was an I zone on a simplicity chart, okay? And we're trying to break out. We want to go long. Okay, and you're saying, well, when can you take a long? I said, well, I want to take a long if it breaks above, 700, 19,700. Okay? And it's tried 1, 2, 3, 4. This is the 5th attempt.
They go
So-
and then go long.
Go long.
Right.
Yeah. So good
Yeah.
good possible chance this is going to go long. Okay. So it went long for a little bit, came back down to test it again, right? It's still meandering. It's for a 4-hour chart, this is pretty close to the line and the level. Okay. And then obviously it tested. Look how many times. I'm sorry, this is a 1 hour. I'm sorry. On a 1 hour chart. Same thing even if it's on a 4 hour. This level is pretty significant. We can already tell. Would you agree?
Yes.
Yeah.
So
Sure.
690, if I go back on my simplicity chart and I look at, what is it, 19,690. I've got one at 660 and one at 730. 690 is right here. Again, right smack in the middle of the levels that, and notice how these are different. These are dot dashes now as opposed to the dots. So these are different days. Actually, these are different weeks. Same day, because they're the same color, but they're different weeks because of the markings of them. So this is within a week or two apart, and that level that we drew is right smack in the middle. Do you guys kind of see how all this stuff is starting to come together now?
Yeah.
Yeah.
So that's the 1 hour. And again, we can try to find levels, wherever. See here, this is like all-time highs now. So it's going to be really difficult because we haven't been here very long, right? Because if we look at it, we broke this all-time high right here, which was done November 11th. And what's the interesting part is it came back and retested it December 10th, a month later. Kind of see that? So we'll just leave that there for now. Okay, it's all-time high, 2 touches. Price will definitely come back here again in the future, for sure.
Can I ask a
Ron-
quick question?
Sure.
I don't mean to skip ahead here. I
No, it's
remember back in the day when we used to have to manually draw the dynamic magnets and the walls. Is there a project underway where these levels will be plotted on our charts automatically so we don't have to do it manually?
You mean the ones that I come up with on a daily basis?
Yeah.
I had that suggestion, and it's doable.
Okay.
So if enough people request it, it can't come out of here. But I may be able to do something where, just like we got access to the cluster trade, or did I just... No, you guys already knew that, right? That Ben told you?
Yeah, he told us about the cluster trade. Apparently, we're going to do that next week.
Correct. So we're the only ones that have access to it. The rest of the world does not. So it stays in here. So please don't talk about it and let everybody say, "Hey, we got this," and they're going to go, "Well, how come we don't have it?"
Hey, Ron,
Yes,
I see you're using TradingView,
correct.
and I have seen, and I don't know if you've dove into this or not, but you can use ChatGPT to write code for TradingView,
Okay.
and you can test it. So if you have a pretty good idea of like what you want, and you can verbalize it, I think you could have ChatGPT write the code for TradingView for you to do what you're trying to do.
I'm sure there's a way to do it,
Yeah.
but the thing about it is that it's all about what I see. So I don't know if AI will be able to see what I see and interpret it. They might be able to. It goes beyond my
Well, the
thinking
only reason
capabilities.
I say that is I used to use an indicator from a guy, Buy Money. He's on YouTube, and he had a trading range indicator, and he used the amount of touches uh, to generate the trading, range, the top and the bottom, and it's basically like our indicators. Like after 3 bars, it would print based on the touches. So I don't know if that.
Let me tell you what the danger is of going with AI stuff. Okay. Nothing is going to make you a better trader. See if I even word this correctly so it makes sense. What's going to make you a better trader is sitting at the charts and looking at them and drawing this out manually and seeing this. And we're doing this all in hindsight. But when you're drawing this in a live market, like the ones that I draw on a daily basis, that's all in a live market. As price is price action right now. And you get to learn the ebb and flow of what the market's doing on price action and movement. If you've got some code generated algorithm that's plotting these out for you, it doesn't know timing. It doesn't know unless you write all that stuff in. So, and again, the thing about it is that it won't change with market conditions because the code's going to be the code. So how many times do you think I've looked at a level and I said, oh, this looks good. And then an hour later, I'm like, nah, this wasn't as good as I thought. So is the algorithm going to do the same thing? Is it going to plot something and then take it away? Is it going to know to do that? Or is it just going to plot it because there was a touch there and then it's just going to leave it there? I mean, don't get me wrong. There's something to be said for automation and all that. But at this point, I'm going to leave that to the big boys. And I'm just going to follow what they do because that's all we do. I mean, there's no way I'm going to compete with those guys. Those guys have billions of dollars invested in the market. I'm just trying to make a few $100 a day or a few thousand, whatever. So with this, I look and try to spot support and resistance level, points of reversals and or targets that I can reach. See what the market's doing. When it starts to go on a run, I try to jump on it, and then I jump right off as soon as I get what I want. And then the market can do whatever the hell it wants.
Can I interject here for 1 second? I agree with you as far as not having the computer, having AI to generate all this stuff. But for example, back to Lori's walls, Lori will manually do the walls and then add them, and then we all can see them. So can we do something similar to that? Yeah,
absolutely. That's what I said. The thought was in the process. And what I'm trying to do is see if we, as in the group here, the mentorship program, can get access to that just like we got access to the cluster trade. I don't think that's going to be a problem.
Okay.
So, yeah, and I'll definitely work on that. And again, I ask of everybody in here to please remember that what we get here, we're very, very privy to that, and it needs to stay here because if it gets outside, we will lose it. So, and that would be unfortunate. So, you guys actually have access to stuff that at this point nobody else has access to, which is why I'm going over this where the rest of the ER is never going to know.
Thank you.
Right? So,
Ron, can I ask you a question about
Sure.
the diagonal line you have shown there?
Yes.
Do you recall, and I think that might have just been just for this training video, but I mean, how far back did you draw that? Was that first one that you
That's
drew?
the first diagonal line that I drew on the 4 hour.
You were looking
Look
at
how
the
it
4
plays
hour.
into the 1 hour. And here's the part that's going to make it even funnier. Let's pick the 15-minute. This is the 15-minute. I mean, do you see that?
Mm-hmm. Mm-hmm. I mean, that's what I was noticing with the way the 1 hour was following that, well, even the 4 hour and the 1 hour. And so I was just trying to get a sense of what specifically you were looking at. I remember you drew that diagonal line, but it seemed like it was essentially you just kind of
start
looked
at the
at
highest time frame. I start at the highest time frame, and I go and I basically work my way back from there. So here it is on the 5-minute. Okay. Now we're getting close to our trading window, which is 30 seconds, right? So I spent a lot of time on the 5 minute, a lot. So this would have been a good spot. If I was going short, this would be a good target. If I was looking to go long, this would be a good reversal bounce point. If it's some reason, simplicity gave me a short to break out of this zone here, this would be a good target. Again, I'm just following the line, right? We can't see this, right? But if I'm looking to go short, I'm moving this really super slow. But if I'm looking to go short, I'm targeting somewhere down here.
Mhm.
You see that?
Mhm,
I
yeah.
mean, look at that. So when you guys hear me say in the room, like, Lori, look for a target if we go short somewhere around here. This is where all this is coming from. So you draw the line, you draw the angles, and you leave them there. You don't take them off. Because at some point, they're going to be of use to you. You don't know when, but they will.
So we're taking simplicities off the horizontal line and the diagonal line?
Yeah. Yep.
Is there a point where you take these lines off your chart if they don't seem to be working anymore?
I can. On the 4 hour, it doesn't really make sense to take them off. Because it's, you're covering like years of data with drawing these lines. So I'll take them off on the 1 and 2 and the 5 minute after a few days, because then they become irrelevant. Because the higher time frames will kick in. Those will stay. And if we get to those lines, then we redraw the ones on the 5 minute again. So if we look at the 1 minute, okay, so where are we playing? Come down here, looking for a bounce. Didn't quite get to it. Go out. Keep looking, seeing if we got where it's going to play. Right here, we're approaching it. We're meandering around this line, and then we broke away. You kind of see how these lines can help you make a decision. I think I just moved the line by accident. But this will help you because, again, the lower you go in time frame, if you're starting to trade 1 or 2 micros, your risk is very minimal. So if you make a mistake, you'll know right away. You can't make that mistake. You can't trade 1 micro on the 4 hour unless you've got a huge account. Right? Because if you look at it, the risk where you're going to put your stop is huge. So again, these are all off of the higher time frames. If I was to draw, here's where it becomes more, because on the 1 minute, it looks kind of, everything kind of looks a little lost, right? So if we draw, here, let's do this. Take the 2 minute. Yeah, I don't like it. It's too noisy. Let's look at the 5. Okay. See how we went up, retraced, couldn't break down, went back up into the zone. Doing the same thing here. So yeah, we have like this zone in here. This is off the 5 minute. We got 1 touch, 2, 3, 4. This is live right now, right? So, and then if we go back to our 1 minute, Okay, this is off the 5. And you can see here, 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 here. Bring in the 30-second. This is our 30-second. Okay. See what this line was doing? This is off the 5. Look at all this consolidation on the 30-second. Right? And then it tried to break out, tested it, bounced. Same thing here. A little bit of consolidation, test, down. Here, tried to test, bounce, test, bounce. This is actually really good. This is a good move right here. So if you're doing this, if price comes down, doesn't quite reach the line, retraces, expect it to come back down again, test it, and then go up. So what's happening here is that they're driving price down. Okay. Normal retail traders will think, I'm looking for a long. It didn't quite get here. Okay. So you're like, oh man, I'm going to take this thing long. Okay. But you want to target way up here. Okay. That would be the ideal target. As soon as you get here, you're like, uh-oh, it's turning around. How many times have you guys heard me say, I'm still in this thing, even though, and I forgot who it was, but we were in a trade, in a simplicity. Now, if the stop is big enough, then you're okay. If you're going long and your stop is, your stop is down here, you don't have to worry about it. Even though it's doing this, how many people have panicked and just bailed out of the trade? They're doing this on purpose. They want you to either get out or they're getting all the stops out just to get to here. And then what's going to happen here? See you later. You see that?
They're bidding it down. And you can see that what you were just talking about with leading orders on these.
Give me 1 second. 1 second, guys. Hello?
I bet there's an ODD at that second touch.
Okay, sorry about that. Work calls. Okay, where were we? Yeah, so you were saying you can see that where?
So if you they call like the terminology when you're saying it's coming down like that is the institutions are they're selling the bid. They're buying, or they call it bidding. They're buying or bidding the market down, and you can see that on the OP bars with red leading orders, and there's typically 2 to 3 sells as they are bidding it down, and then that'll stop. So it's just something to watch when it's doing those pullbacks.
Right.
Now, Ron, I'm looking at that second point at 12 o'clock. Do you put ODD on your chart to see if on the second point you're getting ODD before
Which
one
point
long?
now?
At 12 o'clock, see where it came down? Yeah, right there. Do you put ODD on the chart to see if you're getting that for
Nope.
that long?
I don't look for any of that stuff. So, okay, so just for fun, okay, this is 12 o'clock and the price level is 672. All righty. There's 12 o'clock. What do we say? It was 672?
Yes.
There it is right there. Okay. We have reached this low, right? 69, to 92. What is that? 23 points. We're in a consolidation, right? Here's our setup bar for simplicity long. We're in. It have targeted this guy right here, 706, which is something that I plotted yesterday, I think it was. Not yesterday, Tuesday.
So if you've got a line at 672, how much farther can it go underneath 72 before it makes it invalid if it starts going long?
Well, again, the line is at 672, right?
Yeah.
We got red ice at 669, just so happens to be there.
Right.
So, I mean, obviously, if it goes down to 660, we're not looking for a long anymore.
Oh, okay. So so you want to have your levels around.
We're bouncing off. Okay, remember what I said before. What happens? We take it short, right? People are going to go, okay, it's a reversal. We're going to go long. It immediately turns back around and retests that low again. The next time it goes up, it's going.
Now, are you looking for like red ice or flux or dynamic magnets as confirmation?
Nothing. It just all happens to be there.
Okay.
This is based off all my levels. That's it. I don't care about any of the stuff. It just adds to the confirmation. But do you see what I'm talking about? And this just happened like what? An hour ago? An hour and 15 minutes ago? So from 93 to 06, that's 13 points. I mean, we easily got 20. Easily. Any questions?
Yes. The market's not always going to continually be going up on the 4-hour. Sooner or later, it's going to start going short. So, or chopping on the 4-hour and then going short. So you do have like different colored lines depending if you're going long and short.
No.
So you
But let me. I'm going to clue you into something that you might find interesting, and you may disagree with me. Okay. If we pull up the 4, you know what? We'll take this a step further. Let me do this. Turn this into a monthly chart. Since 2002. Okay. So for the last 20, 22, 23 years, what's the market done?
going up.
Okay. This is an index. So what do we know about indexes? I mean, I can do this on the ES, okay? Here's the ES. It's the monthly chart on the ES. What's it doing over time?
Going up.
Do YM. What's it doing over time?
Going up.
Here's the Russell. Only trades than 18, so I'm not really a big fan of the Russell anyway, but if we were to look at it, we can pretty much say that the Russell's been going up since, I mean, it had some retracement. So I don't know how much you guys know about Fibonacci, but from the low of this move on the Russell to the first high that we got, forget about this, when it started to retrace, we pulled back 50%. Never more than 50%, and then we went back up. So this is being recorded today. I can say pretty confidently that at some point the Russell is going to hit 2550 and 2755.
So are you saying you only take long trades?
On the indexes. That's pretty smart, Grant. I like it. That's exactly where I was going with this. Now, let's do this. Only on indexes. There's gold. Can we say the same thing for gold? Pretty much, right? What about CL? Not so much. So the indexes, historically, over the last, we can say at least 20 years, go up over time. So if you get a really good, solid, long setup, pretty high probability chance it's going to win. Doesn't mean you can't get short setups. You can. There's plenty of them, and there's good ones. But if you're looking to be as bulletproof as you can, taking longs only would work, right?
It is funny that you say that because that's what I've become comfortable taking.
Any other questions?
Yeah. Okay. So let's. All right. How do I describe this? With the upward diagonal line, sometimes what's going to happen is it will cross southward and then go back and retest that line and continue down. Have you seen that?
Sure.
Okay.
And we do this all the time. And here,
All right.
let's do this. So let's work on the 5 minute.
I guess what I'm saying is that diagonal line is we're usually looking at that as a support to go along, but sometimes you can get some decent shorts off it too.
What does this look like to you?
Sure.
Can we comfortably say that this will be, and we're not talking about a trend, we're just talking about a directional move for this time frame.
Yep.
Okay, the overall trend, we know the big picture is long. We know that. But all of a sudden, we got this little short move here, and we're still looking for a long. This, if we're looking for a long, because we're only looking for longs, when will be a good time to take a long? When we break this counter trend move or counter move. Remember, we're looking for long, so again, we can never predict the bottom and we can never predict the top.
Actually, can you scroll back there for a second? Because what you're doing is something similar to like trend channels, and there's a way where while you're drawing the support line, it can do also draw the I guess the resistant line, and there are times where it will hit that, and then you'll get a pretty decent short.
Right. So I'm going to do a couple things. I just drew this line, and this is on the 5 minute. Okay. We hit a low, bounced, came back, tested it, bounced, almost bounced, and then bounced up. And then we're hitting this line, right? This diagonal line here, and bounced down short. So now we're in here in this area. So if you were looking to get a short, okay, and you're here, what time is that? This is on the 10th, 14:20. So this is after hours. It's lunchtime. After lunch, I mean, not after hours. What day was this again? 10th. What I'm doing is I'm scrolling back. You can't see it, I'm off screen. On the 30-second chart that I had moved in here, I'm scrolling back to the 10th at that time. And I'm going to bring it in. I'm going to show you something. And I'd be curious to see what we come up with. Okay, what was the time? Around 2 o'clock, right? Remember, we had these lines came in from the higher time frame. 224. So if you're looking to go short below this here, you'd want to retest this. You want to basically not to break above this if you want to go short, and you want to break below here. Because this, taking it short right here, is too soon. Because we have nothing to bounce off of, right? Because we still need it to come back and test this downward momentum, if we want to call it, so we can take it short. So it came back up. It's testing it. It broke out a little bit, but didn't close above it, and then immediately closed down. Now remember, we drew this on, and again, I didn't see this. I mean, I'm just doing it as we're going, doing like a arbitrary bar by bar, if you would, for better purposes. So, and you can see now this is starting to choke up on this thing. So one of two things is going to happen. We're either going to break low and we're going to dump, or we're going to break above and we're going to take off. Okay, and then if we're saying either one of those directions, you just be prepared to go either direction. If we go low, where can we go? Well, there's nothing, right? So we got to be careful when we get below here. We'd really want to break below 435 if we're going short.
Yeah, Ron, I would take a measurement from the horizontal line to right there, and then flip that down, and that's my target.
Down?
Yep. So you write the horizontal line, and right
Yep.
where you had it, go left, go left, go left. Right there. What's that distance?
To go short?
Yep. What's that distance
So
right there?
you're going distance over time, right?
Yep. So I'm
I
going
know
to take
exactly
that
what you're
distance, and I'm going to flip it down, and that's my target on the downside.
Okay.
If I'm going to take a short.
Okay, let's do this another way. My target would be either here, short term, here, or long target would be here.
Yeah,
If
the
we're
lower
going
one.
short.
Yep.
Okay. Look at that. And this happens over and over and over and over again. Now, I bet we can go back here and we can see this consolidation, right, happen. on the simplicity chart, but would you basically take it here? Because you want it to break below here. I mean, this is the line.
No, I'm going short below that final low right there.
This guy right
Yep.
here. Yep.
Right below that.
That's a safe bet. But you're waiting a long time for that to happen.
All right, fair enough.
Right? Because what happened? Remember, price went down, rejected, came back to test it, failed. As soon as it fails, you go. And, go it did, right? But do you guys kind of see this? I mean, whoops.
Yeah, can you bring pull the chart back up again? Because when it gets into that tight triangle we were just looking at, it can turn around and just go north on you. But
anything can happen, of course.
What I'd like to see is when that diagonal line crosses the horizontal line and price comes back up and hits that as a short. It hasn't done this in this instance, but
And it probably won't, because don't forget this. We're now in a short-term direction.
Now in the far right-hand corner of that chart, that's coming up to that diagonal line. So, and this instance it blew right through it, but I'm saying.
So okay, good point. So here's what we're looking at. So now we're just watching the market. It came back to this point. We already hit our target. Trade's over. Okay, we're looking for a new setup. Okay, now got to keep in mind we're like right before the close too, so we're pretty much done. But, and this is if you're trading power hour, I guess. But let's just say this happened during regular trading hours, the same scenario, which it does happen. Okay. Once price comes here, if it breaks above, we're looking for it to go break out. And then if we have a line horizontally, we're looking for a retest to come back down and then shoot up north again. Or we're looking for this short-term short trend to continue. It broke out, never really retested to speak of, and it just took off. But then again, it's after 4 o'clock, and we're not going to get anything. But
so you're saying the target's going to be the horizontal line? That's your target?
Yeah.
Okay.
But you're looking for it to basically break out of here, come back down, retest, and then go up north again to make sure that it wasn't a false breakout of the short-term short trend downward.
Yeah, I see that.
Make sense? Okay. Any other questions?
Yes. Right now we have a various breakdown of LREs, sniper. Are we gonna have are we gonna put this in like combined charts? Since we're using this primarily for simplicity, we're not gonna be using this for sniper.
You can. You absolutely can. Why not?
Okay.
I mean, the levels are the levels, right? It's just that if you're looking at it, here's the thing. Now, since you're trading on a 10 tick, draw the same lines on a 30 tick, because that's your higher time frame. And then go to a 60 tick on top of that. And then maybe your highest time frame that you're going to use is the 1 minute. Right? Because the 10 tick is super fast. And it's going to be noisy as hell.
Well, I thought we were starting from the higher time frames and drawing our lines.
So you'd start on the 1 minute if you're trading the 10 tick. So you draw the same concept applies, right? What's the higher time frame? You want to go super high? Go 5 minute. If you're trading, my trading chart is a 30-second. Okay, I went 4 hour just to kind of give you big picture, but most of the time I spend in the 5 minute looking at stuff.
Got it.
To get into a 30-second trade, I look at the 5 minute. So if you're getting into a 10 tick, I mean, the 5 minute would be the absolute max. I would maybe even use like a 2 minute or a 3 minute as your highest time frame.
And at what point are you drawing these lines? Like 9 o'clock in the morning?
Yeah, come in like a half hour before the session opens and just kind of, draw it out.
Yes.
And then just leave them. Leave the lines for a couple of days. And you'll see how they'll play a factor. I mean, obviously, because you can see that the levels that I've called, like there's levels I called last week that are showing on the chart today, on the simplicity chart.
No, I think you're using like a yellow dot dash and dot dots. Will the yellow dot dots, depending on the time frame, will that get you confused with gap levels, or do you just ignore gap levels?
I ignore gap levels. And it doesn't really matter because I'll know. I mean, how many gap levels do we get? Not many. And I don't even, you know what? Let me see. I don't even think.
There's a gap
What?
developed in every institutional move. The idea that gap level.
I don't know. The gaps that we're talking about are
No, you're talking about
open close
overnight
gap levels.
gaps.
Yeah.
Yeah, Grant's not talking about that. He's talking about institutional move gaps.
Don't care about that. I don't even care about that. That means nothing to me.
Actually, I was asking about the overnight gaps.
Oh.
So, yeah, it's not really yellow. It's gold is the color that I have. It just doesn't show up very well. And the gap levels are yellow. So you can't see it very well because it's like when this pulls up here and you saw the yellow lines, this is I'm remoting into the computer that's right next to me. So the colors doesn't come in as good. But when I'm looking at the monitor that it actually lives on, I could tell the difference between the gap and the gold color that I have, which are usually on Fridays. That's the day for that. So each color designates a day. If I could ever get this. Okay, so see, these are the colors that I have for the days of the week. Then I have the, each week has a different type of line. And then each month I consolidate all of them and then I put a solid line on it.
Well, you don't necessarily have to keep those on your chart forever. I mean, you could.
Oh, I can take them off whenever I want.
Yeah. The reason why I'm saying that is that that phrase "keep it simple, stupid." The more lines you have in your chart, the more apt I would be to get confused.
Well, here's
We
the
all
thing.
know. We all know
It
how
depends
confusing
on-
my charts are.
Right. I was going to say, you're one to talk because I've seen your charts. So, but here's the thing though, Grant. If there's a bunch of lines that are really close to one another that are different colors, I'll yank them all out and consolidate them into one because obviously that's a pretty strong level. And then that's when usually either Lori will turn it into a wall, and then I take those lines off my chart altogether.
Hey, Ron, when you're taking these trades, what kind of stop and so it's a simplicity trade is what you're looking for off these levels. Am I correct there?
Yeah.
And do you have a standard initial stop?
60, 80. 60,
60,
80.
80.
Yep.
10-4. 10-4, brother. Yeah, I think I think the one thing that I think I realize is if you are going to use this level along with your 10 tick chart or whatever, simplicity chart, you're going to have to probably give it a little bit more room than 21 ticks.
On a 10 tick, you would absolutely.
Yeah. Yeah.
So you can use the 10 tick for a more precise entry, which I don't do because I don't really care, which is sometimes why, I mean, the last simplicity trade I took, I had like a 4-point slip in my entry. And I think we talked about that. It was like, what was it, yesterday or the day before? No, it wasn't yesterday. It was the day before. I got into the simplicity and I got a horrible fill. And I was, and we were barely getting 20-point moves that I was looking for. And it went, like 25 or 30 points or something. So it did hit my target, went a little bit further than that, and then reversed.
And then the other thing, because there looks like a lot of people that are in here, while we're kind of talking about this, I have my targets set on my 10 tick chart for anybody in there. So I do 62 tick targets. And so that's something that I also look at is what we're talking about, these levels. You want to make sure that your target is in between you and that level.
Yeah. How many times have you guys heard me say, I don't have enough room for my target because of my risk? I said, if I'm only going to get, and I've said this many times, somebody would ask me in the ER, how about taking this long? I'm like, you know what? I don't want to take it because my level's only 10 points away, which means my target's 10 points away and I'm not risking 15 to make 10. I'll risk 15 to make 20. Right?
That's helped me a lot, Ron.
What's that?
That's helped me a lot. It keeps me from taking trades that really don't offer me anything. Hey, a 1-to-1, I'm not interested in any more 1-to-1s like that.
Yeah, I mean, guys, if you've heard me for any length of time, I always look for reasons not to take the trade.
Ron, with your diagonal line,
Yes.
okay, how do I put this? Your horizontal lines on your chart are actually gold, even though they're blue in this example. Your diagonal line is blue here, but on your chart, what color are you using? Gold
They
again?
don't exist. You don't see those on the chart.
But I thought you said that you can take a simplicity off the diagonal line.
Where basically that line usually intersects with a daily level. So like this, like for example, this is on the 4-hour, right? And this is where this diagonal line got drawn. It got drawn on this, So I'll draw a diagonal line interim. Like let's say, for example, if I'm on the 5-minute and I'm doing like analysis to try to get into a trade, I'll draw a diagonal line, for example, here. And I'm thinking to myself, okay, so, whoops, what happened here? So I'm thinking to myself, okay, so we're pushing down. Okay. If we bounce off of here and we break lower and I'm meeting this line, I'm looking for a short. But if I break above this point of entry, then I'm just looking to go long. Now I'm looking at my simplicity and I'm looking, okay, where's my range? Where's my consolidation? So I'm just using this for point of reference. This is not something that I will leave on the chart. This comes off because this is only good for maybe an hour. Not even, right? I mean, at this point, it either gets broken or it doesn't, and then you create another one.
So you're just using that for directional basis.
I'm using it for directional, exactly. For short-term direction, short-term directional indication for me.
Okay.
Does that help a little bit? Because here's an example. Look at what happened. I just drew that line. Literally, I mean, I just, and we were going short. At this point, which was the 4th attempt, right? 1, 2, 3. Do we agree this is the 4th? broke up, and we're like, oh, am I missing the move to go long? No. It's going to come back and retest, which it did. And it did not break this level, this horizontal line. And look at what it gave us, this bar. So when this bar closed, I can probably take this thing long, which would probably be right where a consolidation would have been for simplicity to get broken if you look at it, or close to it.
So are you going to be posting some of your simplicity trades, showing your horizontal lines for the day?
No, because they're the levels.
Eh,
The levels that I call, those are it.
okay.
So when I call out levels, consider that's a line that was drawn.
So are you just focusing on the body of the bar and not as much the wicks when you're drawing these lines?
Look, it's very subjective, right? So it's you try to find a close point. Sometimes it's the open or close or a combination of both, like these two bars right here, right? They meet this area right here. So, could you technically draw one here? I don't see why not, right? You've got 1, 2, 3 touches. So could this be a level? Yeah, maybe. And then just see what, price does around it. I shouldn't have taken that off. It's kind of funny because look at what happened, right? I had this line here. Look what happened here. And I didn't even see that. I mean, we were here. I was here when I drew it, right? And then all you did is just zoom out a little bit. Oh, look at that. So you can see how once you draw a line, go as far left as you can and see what happened. Is it valid? Oh, yeah. Okay, sure. Yeah, it's good. Remember, price likes to go where it's been in the past. So if you see something here now, draw it, go back. Where does it play on a bigger time frame? Is it significant? If it's like for example, if I draw this line and this line ends up being in the middle of a 4-hour candle or of a 1-hour candle, or if I drill down even more in a 5-minute candle, if it's right in the middle of it, it's no good. Take it out. It's got no significance at all. You're in the middle of something. You're in the middle of noise.
That just
If that was drawn on a 30-second, this was drawn on a 5-minute. So 5-minute, like I said, is different. I use the 5-minute as an interim go-to high-level time frame for me when I trade simplicity.
Yeah, I'm afraid I'll be drawing too many lines.
Well, at first you will. And Grant, I was the exact same way. I kid you not. When I started doing this, I was like, oh man, this is like what am I doing? And then I started I kept doing it and I kept doing it and I started waiting for things to pop at me. And then all of a sudden, areas just start popping. Here, like this one, for example. Okay. So it came back down. This is the low. Got away from it. Came back down, test, 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 test. You see that? And then it finally broke down.
That's what I was looking at.
In time, these things will just, I don't even have to draw the lines anymore. They'll just jump at you. But it's going to take hours upon hours upon hours of screen time to do that. I mean, let me be honest. I didn't wake up and fall out of bed one morning and I'm like, oh, cool. I'll just draw lines and they're going to be perfect. No, not even close. See, you can even adjust this a little bit even more. You know what I mean? I mean, it's just, there's no like absolute to it, but once you draw it as it's happening, that diagonal line that I just drew, see, you can pick up the points of, yeah, we're pushing down. We broke out and came right back and retested it. Now, that line could have been established right here. You had enough points to draw this down. As it gets extended, as time goes on, you can see what it's doing. I mean, do you see that? So just kind of run it. And then if you're like on the weekends or off hours or whatever, go do what I just did right now. Bar by bar this thing. Draw a line, like scroll back to the chart where you can't see anything, ahead of you. Pick a day. I don't know, go back 2-3 months. Okay. And then start going left as you're drawing your lines. Then move forward and see how those lines play out. You'd be amazed at what you'd find out. I mean, amazed. You'll read the market like you're like, what just happened? Again, it's not going to happen overnight. I'm telling you that right now. It's going to take some time, but it will happen. And trust me, if I can do it, anybody can do it. Because when I first started, I was like, oh man, this is, I'm never going to get this. It's just too much. I got like a dozen people in here and only 2 people are literally like talking.
I'm absorbing.
Nobody has any questions? I'm like shocked.
I was thinking,
I either
Have
did
you
a
ever-
really, really good job or everybody fell asleep because it was so boring.
Not the
Anyway.
case, Ron.
Go ahead, Stephanie.
I'm wondering, have you ever taken your levels and lined them up to a Fibonacci scale?
All the time.
Okay. And how do your levels and them line up?
Well, you saw. I just drew them, right? If I've got a leveled range that I'm looking at,
Mm-hmm.
I don't know, let's just pick anything. Let's go back. Try to find a time. Okay. Okay. So can you agree that this is the high and this is the low where it started to retrace?
Yes.
So on this move, I draw the fib.
Okay.
I'm looking for it to get to at least here, here,
Right.
or here. What's this? Oh, look, it's a level. Back to this touch point over here. This could be a good target. Okay?
Okay. Mm-hmm.
Now, for this fib to be valid, I cannot break this point. I can retrace all the way to it, and
Right.
this is still a valid target.
Right.
If it breaks this fib is no longer valid.
Right.
Okay? First target hit. Second target hit. Level hit. That's it. Now we look for a new fib.
Okay.
I just picked like a random spot in the chart that was during trading hours, and this was
Okay,
at 12:50.
On that note, you've put the fib down and you've got a level like you do in between. Where would Ron put his stop? At your level, or would you go down to the red line?
Well, okay. So to trade Fibonacci correctly,
Mhm.
okay, your entry is going to be somewhere around here.
Right.
Your stop has to go here.
Okay.
That's a huge stop
It is a huge stop.
for a
I
5
wasn't
minute.
putting my
Yeah, but you have to do that because it could easily retrace to here.
right.
Now, you have two options. You don't enter, you don't ever want to enter here. You want to enter somewhere in the retracement.
Mm-hmm.
Here is a safe bet.
Right.
But if you enter here, you absolutely have to target here. Here is going to be your best risk reward. Because from here to here, that's your shortest stop, and this is always going to be your target. If it retraces all the way back to here, this becomes your target. But look at your risk. Your risk is tiny. But since it retraced this far, it could very easily continue going, where this could fail. So anywhere between this zone right here is a good entry point.
Right.
If you're trading Fibonacci.
Right. I don't
And this is your
trade
stop.
Fibonacci. I just put it on my
No, using it. Yeah,
Yeah.
I'm just saying using it.
Yeah. I just use it as markers, indicators.
Right. Just use it for confirmation of stuff, right?
Right.
So,
Yeah.
so for example, if I got in, let's say here at the 50%,
Mm-hmm.
my stop would be here. My target would be here. I'm at a 2-to-1. So you've got basically a 47-point stop and a 94-point target. Now, you guys have heard me say where I've been in a trade for 4, 5, 6 hours. That's a 5-minute trade that has 100. Basically, it's 100 tick risk. I'm sorry. What is it? Is it 100 ticks? Yeah, it's 100. Yeah, it's 100 point. It's 100 tick risk to 630 tick profit. It's almost 6-to-1. I have to think about it for a second. So I'm basically risking $500 to make $32.50.
You are trading minis on those types of trades, correct?
One mini.
Got it.
And that's based off of a 5-minute trade that I take off of a 5-minute. That's a whole nother strategy. That's a whole nother lesson. That's something we can cover later on, which is actually, it's a pretty cool trade.
Yeah.
And that's basically off of a bare 5-minute chart. You look at nothing except for a 5-minute.
It's new to me, so my dad was sharing with me, so I'm still learning.
What's that? Fibonacci?
The Fibonacci.
Yeah.
I just
Yep.
wondered how your levels lined up to that.
They're usually pretty damn close. Which is kind of interesting because I'm putting these levels based on what I see with my eye. Fibonacci is based on pure math.
Right.
Ron, I used to do Fibonacci's a lot way back in the past, and but I'd be utilizing dual Fibonacci's. So on the chart that you had, where with the top point would be the same top point on both those, you'd just be using two separate swing points. And then your for example, you might want to have your 50 and your 79% are like right on top of each other. The closer they are, the stronger that point is. So I've got that all into a spreadsheet.
Yeah, again, like we talked about, try to simplify things. I
Yeah.
try to simplify it as much as possible for me.
Yeah, yeah. I'll definitely be looking into that. I love
What's that?
You cut out.
Yeah, you cut out.
I said I love Fibonacci's, but it's not something that's discussed in Apex along the pivot points and stuff like that. So I spent a lot of time on that.
No, it's not.
I had never heard about it until my dad told me about it not that long ago.
Well, you just use it for like just analysis, right?
Yeah.
I mean, that's basically all it's for.
Yeah.
Because all the
But
Apex
it
stuff
does
is
help
just
with targets, like when
yeah. I mean that it's huge for targets. But then again, I use my level, so I don't really need it.
yeah,
So don't need to discuss it. For me, I just use it as extra confirmation for me.
right.
But which is why we discuss it here, and it would never be discussed in the ER because the majority of the people in the ER, this would go way above their head. They have a hard enough time getting the whole sniper system down, right? They have a hard time just getting a trade plan in place.
Right.
But at the end of the day, you don't need any of this. You can just straight order prints, right?
Right.
So the cool thing about it is you take order prints with Lori, for example, and you take what I see without order prints, and we usually come to the same conclusion. Hers is just much more defined and laser focused with order prints. But a lot of times it'll line up with either hole patches, mini magnets, stuff that order prints gives you. Any other questions?
Not from me.
Enan,
You got it.
quiet man.
No, I'm loving this, but you really did a great job in the last week explaining a lot of this in like short 30-second conversations as we were waiting for a setup. So I had been practicing it. I told you I loaded my 4-hour. I didn't do the 1 hour until you said earlier, but
Well, did this help at all?
oh, absolutely. And I'll give this. It came up a bit ago today about sniper trades. The way I use this stuff is, for example, there's a level or a trend line either up or down. Let's say a trend line that's heading down and the market's bouncing from it and heading lower. There's going to be sniper setups going along. I just ignore them.
Yeah. I mean, why would
That's
you
it.
want to fight it? I mean, because right
Yeah.
now, the short-term direction is short.
Yeah. So wait for the short setups because they're going to be there too. The sniper, I mean, if sniper's firing, you're going to see those as well. So ignore the long setups, and then most likely within 30 minutes, you'll see a nice short setup, and then you can be done for the day.
Yeah, exactly.
That's it.
Exactly.
But I realize too, because I don't know how many years that you've been doing this, Ron, but I do know it's longer than me, and probably longer than most of us here. So my experience with
not really. You'd be surprised.
Well, I've been doing this a year and a half, and
I've been training like with Apex, and where I've actually really become the trader that I have over the last 2.5 years, maybe.
Okay. Well, I mention it though because I'm closer to all that rookie frustration that so many of us experience. It's gone now, but you got to just be patient. This stuff is always going to be there.
Yeah. Yep. I mean, don't get me wrong. It still, reaps its ugly head. Even I, battle with it. I'd be lying to you if I didn't. But everybody does. Even Lori does. And she's been doing this for 15 years almost.
Right.
12, 13 years, whatever it is. Human nature, man. It's just the way it is.
So take that, some of you that may be newer to this, as some solace. We've all been through it. And like Ron said, even today, although I tell you without doubt that the level of frustration is way less than it was for me a year ago or 6 months ago. Way less.
Yeah, you from what I've seen and what I've heard from Ben, you've just made just a huge turnaround and improvement since you've got here.
Oh, thank you. It's like you said, screen time work, and now Uncle Apex is sending me a check every month.
Yeah, well, and how cool is that?
The coolest.
Benjamin, you with us?
Me or the other one?
You.
I'm here. Absolutely.
Good. No, because remember the conversation we had, you said you're going to do and whatever it takes, right?
Absolutely.
So I'm just trying to give you some inspiration for whatever it's worth, right? I mean, Keenan's, kind of like the poster child. I mean, it's kind of funny. Lori uses me as the poster child for the ER, but it's, there's if you put in the time,
right,
this will happen for sure.
Agreed.
And like Grant said, it's like when you're going to start out, you find yourself just drawing lines everywhere. Where it's just like what? And if you get to that point, just don't get frustrated. Wipe it all out. Just have the chart be blank and start over.
Right. I'm actually more. Yeah. I'm more used to the drawing lines part. It's eliminating the ones that. So, for example, I used to spend way too much attention on either the overnight low or the overnight high, or the breakout high or low. And I realized at one point it wasn't leading to anything actionable for me, so I took it off.
Right.
But I'm going to configure these my trading view this weekend for that exact same view, Ron. The 4, the 60, the 15, etc. And put that into practice. Because you're right, you do start seeing things. I mean, it's when you scroll back and see that, it's the same spot it bounced off, a month ago.
Exactly, and all of a sudden, all kinds of light bulbs start going off, and you're like, oh man! And not only that, but it gives you confidence, right?
And yes, and the confidence. I think you had said it last week, and Ben echoed the same thing of you guys look to not take trades, and I was like, well, what are all these things you're eliminating? And it's those type of things. You're saying, wait a minute, I'm not going to take this short because there's a level, there's a level 8 points away that it's likely going to bounce off of. Oh, okay, now I see why you're not taking what looks to be a good setup, because it's not a good setup with the information that you have.
Right. Right. And again, if that's look, if there's any doubt at all, I'm out. I'm
Right.
out.
So that has had. I've been chewing on that for a week, Ron.
Well, it's a hard concept to grasp because it goes against everything that your
Right.
like, human instinct tells you to do. First
Right.
instinct is like, no, I got to take this trade. This looks perfect.
How
It
am I
doesn't
going to make
matter.
money if I'm not in a trade?
Yeah, exactly. Well, you're not going to lose money if you're not in the trade.
Right.
That's a guarantee.
Which by far has been my problem. It's not finding winners; it's finding too many losers.
Yep. Yep.
So can I ask a quick question? In recap, we're drawing our horizontal lines on the 4 hour, the 1 hour, the 50 minutes, and then we're using the directional on the 5 minute. Is that correct?
Yes. You can also
So,
use Yes.
so when would I be using the 1 and 2? I'm asking this in reference to simplicity. So when would I be using the 1 minute and 2
Same
minute
thing.
charts?
Same thing.
Same thing.
Same thing. Just to dial in a little bit more. That's all it is.
Okay.
And you can always draw the the diagonal ones on the 1 hour too, and the 4 hour if you want, because at some point they will play a factor. You're going to see if you draw them in there. You may not see them on the trading or on the 5 minute and downward time frame, but at some point you will.
Yeah, it just gets a little confusing when the market decides to change directions.
Well, I mean, patterns happen when it changes. I mean, nobody can predict when that's going to happen, but it'll give you some kind of a sign or a clue. I mean, think about it. It's like you want this iPhone. You want it really bad. Are you willing to wait for it to go on sale, or are you going to want to buy and pay for it whatever it's going for today?
Right, but the horizontal lines I take it are going to be stronger on the larger time frames, like the 4 hour.
Well, yeah, because don't forget the institutions, they look at that stuff. They don't look at the micro stuff that we look at. They're in it for the long term.
Yeah.
So if you're in it for the long term, right? If we were to basically look at, okay, this is a whole nother lesson, but we can put things into perspective, okay? They don't even look at this. They'll look at like the dailies. Actually, it looks like people are starting to bail out of here, so maybe we should cut this short. But bottom line is like if you look at a daily chart, and you start drawing these lines, that will have a much more significant impact on what the institutions do than anything else. And then if you start, drawing targets to there, then you can see where's the market going to go when it bounces off of a level. Right? And where would be the entry point?
Yeah, I understand what you're saying. I used to do some of this stuff like ages ago before I came to Apex with foreign currencies. And you're drawing all these lines and stuff like that. The problem with that and pivot points and Fibonacci's, the problem with that is you only had like one trade for the day. And,
Yeah, but even if you get one trade, it's too bad that Stephanie took off because I was going to show something here. So here, this is the point that she was asking me.
But it could be like 3 o'clock in the morning. So,
right. So let's take this. Start retracing. Okay, let's pick this point right here. Okay. I drew this Fibonacci, right? You see that? And this is on the 4 hour. Where does the 618 retrace to? I mean, price retraced all the way to it, and where did it meet?
It met at the 61% retracement and the diagonal line.
Exactly. And then it took off, right?
Yep.
So based on this, so if we were to draw this Fibonacci back in August, you're going to love this part. So back in August, when I drew this Fibonacci, because that's when I would have drawn it, I would have told you then, if we don't break below 17,350, we're going to 21,677. And you would have said, you are out of your mind. Where are we?
Yeah, you got the extensions on there too. Cool.
Do you see what I'm saying?
Oh yeah, yeah. I understand what you're saying.
So when you get this, which is like the perfect Fibonacci retracement to target, is here. So if you were to trade this on the 4 hour, you're going to say to yourself, okay, I'm getting in here. My stop is, what is that? 1,000 ticks? Sorry, 1,000 points. My 1,000 is 1,000. 1,048.25 times 4. 4,100 ticks times 5. I'm risking $21,000. Okay? To make, I'm risking 21 grand. $67,000. 3 to 2. 3 to 1, sorry. 3.2 to 1. Now, can you be in that trade for 3 months? That's a swing trade. So if you're a swing trader and you're looking to get into this, all right. Trade 1 micro. Risking 2 grand to make 67.
Yeah, but the confusing thing is with the Fibonacci extensions, it could go to the 0.27 or the 0.62. It's not, you know what I mean? It's not always going to the 0.62
What's that?
with the extensions.
Do you mean the 6-1?
Yes.
That's the target. If it retraces to 61, okay, here's one thing about Fibonacci. Okay? If it retraces down to the 61, if it does not break the 0 point, okay, let's call this point number 1, point number 2, point number 3, point number 4. Okay? You follow me?
Yeah.
Or A, B, C, D. Have you heard that before, the ABCD pattern?
Oh, yeah, I did.
Okay. If you're basically, when you get in, if it retraces to the 6-1, it's the 618 is what it's called, the 618. If it retraces to the 618 and you get into the trade, if you don't hit and you break below A, it will always go to the 61.
Have you ever done any Gartley trades?
No.
Okay. Haven't done those in ages.
But you go ahead and you can run this thing 1,000,000 times. If you don't break the A point and you've retraced to the 618 or lower, you will always get here. And if
Ron,
you've
when you
traced,
say, I'm
oh,
sorry,
go
when
ahead.
you say if you don't break the A point, where? Because of course the A point was created because that was what you selected as the A point. So when you say don't break it,
That's the low.
what point
That's
in
the
the
low.
future?
That's the
Right.
low. Remember, these are all about moves. This was the low of the move. Wasn't anything lower, right? I mean, except for
Right.
here. But how much time did it take for it to get here? Right?
2 months maybe.
So,
So are
but
you
here's the thing.
saying if the C point never breaks the A points level, then you know it's going to go to the D point? Is that
Correct.
right? Okay.
No, if the B point, no, if the B point never breaks the A point. I'm sorry, the C point, correct. Yeah, the B point's up here. The C point, correct.
Okay. So it may take it a longer period of time, but it will always get up to the D point.
Right. And if the C point gets down to the 78, then it will go up to the 27.
Hmm.
If it gets to the 86, it'll go to the 12. That's your target.
Hmm.
So if it retraces here, now even though, look, when it gets down to this point, now your risk is really small, right? So if it gets to, if this is your entry, this is your target. Now you're at almost a 4.5 to 1.
Hmm.
Okay. If it goes here, now you're in an 8.5 to 1. But the risk is when it retraces this far back, there's a good chance this could fail. But if it doesn't and it goes, that's where you're expected to hit. Here, I'll give you an example. So for every move, when there's a retracement, you can expect it to at least go the initial move. Right? So whatever your A to B point, whatever that move was upward, after it's done its retracement to its deepest point, you can expect it to go at least the distance that it went in the original move. Sorry, my phone will not shut up. You see that?
Yep.
All right, guys, we've been at this for 2 hours. Any other questions?
Ron, can I ask you a quick question about this tradingview.com? It looks like it's got some amazing drawing tools and things like that. Can you just speak a minute about that and as far as the data feeds or using it or how all of that works?
Well, it's just another platform, right? That's all it is, another trading platform. You can, so here's the thing. The basic, if you just get the basic version, which is free, then you get delayed data with it. And the data thing is like 5 or 10 minutes delayed, whatever it is.
Mm-hmm.
And if you pay for it, I actually every Black Friday I just add on to the subscription, and this last one was like 70% off. So I tacked on like 3 years at 70% off, which was like almost like free. And then you get live data with that. And then with that, you can actually configure your Tradeovate if you've got like an ATF account with Tradeovate. You can configure that, and you can actually trade out of here if you wanted to. I don't use this to trade out of. I just use this for analysis because it's just super easy and fast. Ninja is not that great with
Is it
all
pretty
this stuff.
expensive?
I don't know how much it runs now. Huh?
Okay, I can check the site. I was just wondering if you knew offhand.
Yeah, I think I got like 3 years for like, what did it? I think it came out to like, was it $16 a month? I think.
And they do sales
that's what
throughout
it
the
came
year
to.
too.
Yeah, that's what I paid. I
Huge
think I paid
sales.
somewhere around like between $500 and $600. I paid,
Okay.
and I got 3 years worth.
Okay, thank you.
But again, it's just another tool, right? Until you start making money with this, I wouldn't look to spend another dime with whatever you've got. Use what you've got.
Mm-hmm.
I'm just being honest with you.
Mm-hmm.
If you're not yet seeing profits and money out of your trading, then time is probably going to be your largest investment, or they should be anyway.
Okay.
And I wouldn't go trading any prop firm accounts until you're like 100% sure that you're comfortable with your setup and your market reads and all that. Because you need to treat that like real money. Even though it's cheap to get, you can get a 50K account for what, 16, 17, 18, 20 bucks, whatever it is.
Mm-hmm.
And you're thinking, oh, if I just blow it, I'll just get another one. Well, next thing you know, you've blown 100 of them, and you spent over $2,000, and you still don't know what you're doing. I'm not talking about you specifically. I'm just saying in general, right?
Sure.
So save your money. Learn this stuff. And when you can trade this well on paper, then start trading this. You need to, and I've said this a million times, for those of you who are new and haven't heard me say this, you need to earn the right to trade real money. And there's plenty of things you can do that will show you that you've earned the right to do that. Like, the 25 mistake-free trades exercise that we've talked about. Go through that a couple times in a row when you've basically got 50 trades under your belt where you've not made a single mistake. Doesn't matter whether the trade wins or loses. That's not the point. The point is that how are you with your execution? How are you with your market read? When you've got 50 flawlessly executed trades, then you're ready. And then just flip the switch, move from sim to whatever you're trading, and then trade 1 micro or 2 micros. So you don't get psychologically screwed up thinking, oh my God, I'm starting to, I've got all this money on the line now, and then just gradually work your way in. 1 micro, 2 micros, 3 micros, 4 micros, 5, 1 mini, 1 mini and 2 micros. And we can talk about how to do that later. Yes, you can do that. You can trade on the same trade 1 mini and a micro at the same time. And that's how you kind of like literally like micro scale in your trading. It's like, what if your risk allows you to trade 1 micro, but it's just not enough to trade 2? I'm sorry, 1 mini, but not enough to trade 2 minis. So you trade 1 mini and 2 micros. And then you work your way up to the 2 minis. We can discuss that in a different, session, how to do that.
Thank you.
Okay, guys, anything else?
Hey, Ron, thanks. Appreciate your time today.
Yep, no problem.
Thank you,
See you
Ron.
tomorrow.
Okay, thanks, guys. Have a great day. We'll see
Thank
you all
you.
tomorrow. Yep.
I'm going.
Bye.
See ya.
Thank you.